The number, I think, is 10,000 fintechs. With that in comparison, there's 4,800 credit unions. When I talk to those credit union executives, it's just noise now. They're like, we get bombarded with fintech companies reaching in all the time. So I think for the advice to those fintech companies, it is important to connect with somebody that can help open doors for you.
Welcome to another episode of Fintech Confidential. I'm your host, Ted Huff, and today we have a very special guest joining us. We're thrilled to welcome Brian Kaas, the president and managing director of TruStage Ventures. TruStage Ventures is a venture capital arm of TruStage, a company that has been a pillar of credit unions across the United States for many years. Now, with a network that extends across 97% of the credit unions in the U.S. and has partnerships with over 1,500 banks, TruStage Ventures has uniquely positioned themselves in a way to drive innovation in the fintech space. Under Brian's leadership, TruStage Ventures has invested in over 55 fintech companies and acquired 7 of them, demonstrating a long commitment to fostering innovation, collaboration between the financial institutions and fintechs. But Brian's journey in fintech didn't start at TruStage Ventures. He has a background in law and served as a partner at a national law firm. And he handled a broad range of complex initiatives, transactions, mergers, you name it. Brian was part of it. Today, we'll be diving deep into Brian's journey of fintech and the mission of TruStage Ventures. And we'll explore all the problems that they're focused on solving with their investments.
Support provided by the Vital Credit Card. Make a statement in your wallet with a sleek metal credit card that pays you cash back when you share and spend responsibly while helping you improve your credit health. Request your invite at vital.fintechconfidential.com. Welcome to Fintech Confidential, bringing you the people, tech, and companies that change how you pay and get paid.
I'm so excited that you're here to join us in this conversation with Brian. So let's just dive straight in. Brian, it's great to have you here.
Ted, it's great to be here as well.
We talked about a number of things about what TruStage is doing, a handful of things of your background, but it doesn't sound like you got into fintech on purpose, and you've got to have a falling into fintech story. Could you tell us about your path into fintech and maybe even what that defining moment was that said, I've got to join TruStage?
Yeah. Happy to kind of take you on that journey quickly. Kind of going back, coming out of college, I actually was going to pursue a path in politics. My roommate went on to become the chief of staff to one of the U.S. presidents, and I ended up taking a different path, going to law school, practiced law for a number of years, and ended up at TruStage about just a little over a decade ago. And at that point, practicing law, but really was into the problem solving, into creative deal structuring, and our organization saw kind of the impact of technology on really reshaping financial services. And as you mentioned, given the broad relationships that we have with credit unions and now banks, we really saw a need and an opportunity for us to get into the fintech space. I raised my hand to volunteer to kind of lead the charge. That was back in 2016, and now, as you mentioned, 55 investments and 7 acquisitions later, we're into the game.
Can you share with us like an experience or an encounter that gave you that passion to really search out the fintech companies that are solving real world problems?
Yeah, I think, a couple things that really, drove me and gets me excited about this space even today. One, if you go to sort of the mission of TruStage, we really believe in empowering people and providing financial security to people across all income levels. When I look at what fintech is able to do in terms of helping consumers achieve brighter financial futures and getting to work with founders that are innovative, energetic, amazing at problem solving. That's what inspires me. Or gets me excited in the morning. Much better than, reading legal documents and the fine print, as a career that I had prior to this transition.
What was that moment? Was there a deal that happened? Was there an opportunity? Was something happened that just you realized that you needed to jump into this particular space? Outside of mission and vision are fantastic, but there's always that pivot point that happens. Do you know what that is? And could you pinpoint it?
Yeah, again, probably in the exact moment where I got kind of thrown into this. We had done our first fintech deal, and I got a call over the weekend from our CEO saying, "Hey, we kind of need you to jump in and help out on this." And at that point, I knew very little about fintech. Brushed up on it over the weekend so that on Monday morning I'd be kind of ready to roll. And, it was through that deal and kind of getting thrust into this, working with the founder CEO, that kind of journey of building the company. So there was a very clear defining moment. I remember getting the call on a Friday night, and by Monday morning, that started my journey into fintech.
I can only imagine the level of overwhelm you had when you're like, oh crap. Like, out of that weekend of just diving in and doing your like quick overview, was there one thing that stood out that you're like, okay, now I can see this or I understand it, that kind of still sticks in your mind?
Yeah. I mean, I think coming from a legal background versus a tech background, the most angst I had is I don't know, how to code. I don't know, a lot of at that point, especially, that much about the technology. So there was the angst in that. But when I, really talked to the founder, of the company on Monday, and they're solving a myriad of issues and challenges as an early stage company. And that's where with the analytical background, I'm like, I'm going to do okay, in this job. I can get support and learn the tech side of things. But that was that eye-opening moment where, hey, I can do this, and fell in love with it almost immediately.
Fantastic. So, you touched a little bit on the vision and the mission of TruStage. Can you describe from your perspective the vision of where TruStage Ventures is going and how that plugs into the overarching mission of TruStage, the parent company?
We want to create an ecosystem that brings together fintechs, and credit unions and community banks. A lot of the large banks, the big banks, have plenty of resources. So I don't, lose sleep at night, worrying about how they're going to navigate through all the change that's occurring. But been talking to a lot of the smaller financial institutions. This is a real challenge for them. And so we want to help them, navigate these changes, help them, and educate them on all of the fintech companies that are out there, and really kind of use our knowledge and experience to kind of bring these two worlds together that at least historically, were from, different worlds. And, I think we've come a long way in making those connections. And at the end of the day, ultimately, again, it goes back to the vision of also helping that end consumer, which is important to kind of the very broad mission of the organization.
In all of the investments you've done, and even looking in the future investments, how have those core principles really influenced your investment decisions over the last few years, especially with the changing economy?
Yeah, it's been certainly in a pretty rapidly evolving evolution. Because of the broad network that we have with credit unions and a growing network now with banks. When we look at companies, even companies that historically have been direct to consumer, we see opportunities because our business has been built and really kind of leveraging the affinity relationships with banks and credit unions to, offer products and solutions to their customers. It's really more of a, B to B to C. So what we've seen in the fintech space is, direct to consumer companies are very difficult and very expensive to build. So is there a better path for those companies to supplement, or in some cases even shift, working through channel partners to reach the consumer? And that's certainly been a big component. We've seen a lot more companies in the direct to consumer space reaching into us to explore those opportunities.
As you've made those decisions and looked at all those different things, as you look at the websites and the LinkedIn and all the different places, you guys have made substantial investments in fintech. Could you maybe take a little bit further than what we just talked about and expand on how some of those investments have moved that mission forward?
Yeah, I certainly can share maybe even, a few examples of how the strategy is actually playing out through these real life examples. When I look at some companies that we've invested in, good examples would be a company called Goal Setter. So Goal Setter is really sort of it's a parenting and even Tween banking app, but how that kind of resonates. One, it's building, obviously financial literacy for young people, but we see opportunities for banks and credit unions to use a tool like that to really bring in the next generation of their members and customers. And in this digital age that we live in, I've got 2 teenage kids, that are really driven by a TikTok-like experience. Goal Setter can kind of deliver that and gives those smaller institutions an opportunity to reach in and connect with the next generation in a way that they have challenges trying to do on their own. So that is, I think a good example of a company where we can leverage our broad network to help drive growth into the company, but also help the credit unions and banks grow on their end.
Other than Goal Setters, what investments have TruStage Ventures done that has really moved the needle for these credit unions and other smaller financial institutions?
Another good example of an investment that we made that we're very excited in is a company called Kaas. So I'm a big believer that, especially when it comes to lending, we will see more and more of the lending occur at the point of purchase, and retailers really starting to own sort of that lending relationship, which is going to be a big disruptor to traditional banks and credit unions who are relying on their members, coming to the bank or credit union, talking to a loan officer, or even going to the website to get that loan. So CarSaver really is an e-commerce platform for a consumer to buy, purchase, sell, finance, and insure a vehicle. They partner with car dealerships for the inventory, and they partner with banks and credit unions to provide the financing for those vehicles. So similar to Carvana, but really like an asset-light version of that. To me, that's a critical way where credit unions can still, really play in this digital world of e-commerce. CarSaver's also partnered with Walmart to provide their auto buying program that they're building out. And again, how do we bring credit unions and banks into that ecosystem or that digital environment? So to me, that's critically important of how it kind of brings all of these pieces together.
TruStage Ventures has really what it sounds like has a commitment to nurturing the collaborations between the financial institutions and the fintechs. But you and I talked about it before. It isn't always the best relationship straight out of the gate. I was hoping you could discuss like some principal challenges that you're tackling through these investments.
Yeah. One of the big challenges, apart from, almost kind of educating fintech companies on, especially the credit union culture, it's very different. Credit unions are not-for-profit organizations and really put the member first. So first of all, it's just kind of getting the two cultures to, again, kind of understand one another. Another challenge though that we see is, unlike a big bank that, can pay a significant amount of revenue to customize and integrate that fintech company into the bank, we have to kind of rethink how you're going to approach the sort of the middle market, and kind of the smaller end of financial institutions from an integration standpoint. And that's where, again, we spend a lot of time of how do we kind of provide integration solutions at scale so that it's affordable for the credit union and still profitable for the fintech company. And again, that's another way that we can provide value, in addition to helping kind of bring distribution into those markets.
Can you share like a success story, like with one of the investments that has bridged one or all of those gaps?
Yeah, I think if what we've done is we've acquired some fintech companies. We've, closed on 7 fintech acquisitions over the last 5 or 6 years. And so what we've done is integrate some of the venture companies that we've invested in into the platforms that we've acquired. Why that's good for us is, one, it's made those platforms that we've acquired more powerful, bringing more functionality, more capability that we can offer to banks and credit unions without having to have the fintech company do those on a one-off basis. For us, it's much cheaper for us to partner than it is to build these capabilities. So it's been tremendous benefit for us as well. And obviously for the venture companies, to be able to kind of plug into that. And we have a platform, it's a company called QAccess, that provides kind of perpetual loan offers to credit union members. And we've been able to integrate a couple of our portfolio companies into that platform, by way of example.
All of these things are fantastic. And I start to think back with my consulting company. We spent a lot of time working with fintechs and helping them understand and translating the language between a financial institution and a fintech. What are some of the areas that you would see that it would be beneficial for fintech startups to reach out to someone like my company? I'm a shameless plug. But what are some things that, when you're looking at investments, you think, hey, it would have been really helpful for them to go talk to Ted and his team to get ready to come to me because they're just not ready. Do you have a couple examples you could share there?
Yeah, I think, common things that we see, one is just how difficult it is in this day and age with fintechs to get traction with credit unions and banks. I mean, the number I think is 10,000 fintechs. With that in comparison, there's 4,800 credit unions. When I talk to those credit union executives, it's just noise now. They're like, we get bombarded with fintech companies reaching in all the time. So I think for the advice to those fintech companies, it is important to connect with somebody that can help open doors for you, because unless you're a large fintech that has built really solid brand recognition, that's a challenge. Another area is just some of the integration challenges into the systems that these credit unions operate. And to be able to segment the market, to even know who you should reach out to if you've done an integration into a specific core system. For example, like we know now every credit unit on that core system. So rather than now reach out to another one and, the time and effort it takes to integrate into another core, we try to, let's go approach all those credit unions, because it's going to ease pain points for both the customer, the financial institution. It's going to accelerate, kind of the work on the fintech side. And that's an example of where consultants, strategic investors, channel partners really can make a difference.
Well, now that we've talked about the places where they need the help, and let's just pretend like they've figured all of that out, could you outline the kind of fintech companies that align with the TruStage Ventures direction, and maybe some specific attributes that you look at before deciding to invest?
There are two that are absolute critical dating items for us. I mean, we want to invest.
I love how you put that, dating items. Love it.
The first thing is, there has to be a good cultural fit. These are long-term relationships that we're going to have with our portfolio companies. And it's not only just the capital that we're providing, it's really the strategic value of helping those companies grow. We're our company's headquartered in the Midwest. So we're kind of, Midwestern principles, nice people. We want to work with founders that align with us culture. The second other big item really is there that strategic fit? Do we think that we can help drive outsized growth in value into a company? And if it's an area or a company where we just don't see that opportunity, we'll take a pass. If we kind of check both of those boxes, then we'll kind of go deep into the diligence that you would expect. But those are really important to us.
You said something that I tend to feel like most companies overlook more often than not when they're looking to go out for investment or to partner with a company. And it's really the culture. Can you help define what a cultural fit would be for TruStage Ventures?
Yeah, I think for us, for a company to be successful in fully utilizing the strategic value that we bring, because we want both the fintech analysts to benefit from that. It has to be, the type of leadership oftentimes that believes in the core of their mission. With credit unions, that's critically important. So if maybe it's a founder that is all about, dollar signs, a founder that, just wants to push for the fastest exit, and that comes across, that's not going to resonate well with credit union leaders. they'll see right through that. And then, at that point, that actually hurts our own reputation. Because we don't want to put someone in front of the credit union that isn't aligned on those kind of core underlying values. With that said, obviously we want founders to grow. We want a successful exit, but, they have to believe kind of in that mission.
Yeah. No, I love that you brought up the cultural piece of it, because, it's almost given that you want to increase revenues, you want to increase adoption, you want to increase the engagement. Like, all of those are pretty much given, right? And it's really, how do you deliver that in a way that matches the customers you're trying to deliver it to? And too many times people just look at the numbers, right, and then just push hard into the numbers. And I'm really happy to hear you say that the numbers are cool, but if the culture doesn't fit, then it's still a no-go.
Right. Yeah, absolutely.
I'm going to transition out of like the Spanish Inquisition piece of this. No, I'm just kidding. But really just diving into the market is so different right now. I'm seeing people get investments of 130 million, $1.2 billion still happening in fintech. Not as often as it has been in the past, but given in your experience, the investments you've done and all the different various areas, what is your perspective on the current fintech landscape, and what patterns are you noticing?
So I feel like there's some new life that's starting to, kind of be breathed and pushed into the fintech space. The last 12 months, maybe not quite 12 months. I mean, it's been challenging. It's been, what we've found is it takes companies, many times longer to bring around together. It's taking, a lot of time to get that lead investor locked in. We saw a lot of insider rounds. So I feel like, a lot of venture funds have kind of really, batten down the hatches. We're going to fund companies in our portfolio. We're starting, at least what I've seen over the last 2 months, it feels like a thawing of that. We're seeing term sheets actually, come across our desk. We're seeing rounds close, at higher valuations. So I'm hoping, even with some of the, kind of leveling off of just the interest rate volatility, it just feels like it's maybe more stable now than it has been for, the last 10, 12 months.
I was at a KBW event earlier this year, and it was interesting to listen to all of the folks up on the panel from different types of investment groups really talk about it. And one of the things that was brought up, and I'd love to get your thought on this, is they quit calling it down rounds because they were versus looking at the old valuation, the new valuation, and they started calling them a reinvestment round because they felt like it had been a reset to reality. And now it's just reinvestment to continue to move forward, not really focused on growth, but just to continue to move things forward until the growth curve kicked in. And I'd love to hear your perspective on that.
I think that's a great way to describe that. I'll have to use that as well.
By all means, please do.
I mean, I think 2021 was nuts. I mean, in terms of the run up on valuations, it was not sustainable. It did not reflect reality. So I think, certainly the market is kind of, adjusted and valuations are more in line. Sometimes I have people that hear, you're a fintech investor, and they kind of look at that and they compare it to the .com bubble and bust. And, I think I point out, I see significant distinctions. I mean, a lot of times here we have companies that have good, solid, business fundamentals. that have a viable product, that have product fit, and, through no fault really of their own. I mean, saw these valuations go through the roof versus, we had a lot of .com companies that were funded in 2000 and 2001, that probably should never have received $1, but you had .com at the end and you could raise capital. So, I do see a distinction of that. This is probably more of a market correction. The fact of the matter is, digital transformation of financial services is not going to diminish as we move forward. It's only going to accelerate. So, in the banks and credit unions, for the most part, are not going to be able to develop and implement and maintain the complexity of systems that fintechs have built. So, long term, I am still bullish on this space. There'll be tremendous opportunity and tremendous demands from banks, financial institutions, and consumers.
So I'm going to ask you to hop into your hot tub time machine. Go forward a little bit. What types of things do you see happening in the fintech sector, and how is TruStage Ventures preparing for future trends?
Yeah, I touched on embedded finance becoming increasingly common. And so, that's going to be an area of focus of how do we kind of plug in the entire credit union system into these new environments so that they're not left behind. And I think making investments in a company like CarSaver that I mentioned, or Affirm. Affirm is the buy now, pay later platform that's integrated in with Amazon. How do we now create partnerships through this technology that gives credit unions a seat at the table that probably no individual credit union is going to be able to do on their own. So that's a part of where we'll be focused. I think another area is how do we help drive a lot more automation into these smaller banks and credit unions, because it's going to be very difficult for them to remain competitive if their expense structure looks vastly different than fintechs or big banks. So that's not as sexy, streamlining back office functions, driving in automation.
It depends on who you are. I mean, I'm a pretty big data geek. So when you start talking about cutting out touch points, reducing time, reducing errors, to me, that gets me excited. So I'm one of those people that a lot of times get more excited about what happens behind the scenes versus what happens in front of the scenes. And it just makes me wonder, are there specific initiatives that TruStage Ventures is implementing to gear up for these future trends of automation and all the data and the back end? And yes, I have to use the buzzword machine learning and AI.
Mm-hmm. Yeah. I mean, I think, again, what we're doing is trying to offer full end-to-end solutions that incorporate the best of the best, the AI, the machine learning, data, do all of that on the back end and deliver an end-to-end solution so that a credit union doesn't have to try to piece together 10 different technologies from 10 different fintech providers that they need to then integrate into legacy core systems. How do we kind of do that? We've created a fintech solutions business unit within TruStage that really is kind of that go-to-market team for companies that we've acquired and invested in to do a lot of that heavy lifting to build the piping. And I think that is going to be critically important because credit unions and banks just have project fatigue. They can't do a whole lot more. They can't maintain 20 new systems. So we'll try to take that heavy lifting away and kind of bear that on our end.
I can imagine that the core systems companies really appreciate that as well, because now they're dealing with a team that is very familiar with their systems. They've had projects before. They know the pitfalls not to jump into. They know the swings to swing from. Like they aren't like bushwhacking their way through it. They're going through with a very calculated approach.
Yeah, I think that's right. We have really good relationships with all the major core providers, a lot of the loan origination system providers that are critical to, those operations. And again, to kind of leverage those relationships, which also are very important, for fintechs, especially when they're small companies trying to get, some of the really big guys to move can be a challenge. And again, that's where I think it kind of benefits everybody, and it brings just more efficiency into the process.
Well, Brian, we're getting close to the end. And before I ask my last question, we've covered a bunch of stuff. Is there anything that you wanted to make sure that the audience heard that maybe we haven't covered?
I just, kind of go back to the, piece of advice maybe for fintech companies, and maybe this is a, plug for us, but strategic capital, I think, is becoming more and more important here. Really looking at the value that your investors can bring to your company. And what we look to do on our end is we really want to position ourselves with investors that have capabilities and bring value that we don't, apart from, writing the check. Whether that's, investors that have even deeper relationships with banks than we do, or, media companies that can provide access to their vast network. To me, that's going to become increasingly important to help those companies really grow and scale, because there just are so many fintech companies out there right now. And, to get that growth that they're going to need to get to the Series B, C, or D stages of funding, those investors will be critically important.
If you were to offer one piece of advice to an entrepreneur trying to decide on which fintech product or products they should concentrate on, what would it be? And the reason why I ask this question is what I've seen, and you've probably seen this as well. What happens is an entrepreneur has an idea and starts down the path and then sees all the different connectors and then decides to, okay, well, now I'm going to expand into this and into this and into this and into this. And now they've got 15 products that are half-baked, maybe. What advice would you give them to figure out how to find the one lane to focus on? And maybe I'm wrong. Maybe they don't focus on the lane.
Yeah, I think what we've seen, at least early on, for a founder that's in the early stages of developing that product or piece of technology. I mean, one, really understand your end market. And I think you have to get really good at serving that core market and proving out product fit and generating revenue and demonstrating growth before you start going into 5 different directions. Because what also happens is that becomes very expensive, and you're going to burn through a lot of cash, have a lot of half-baked ideas or products, and you're going to run out of cash. You're not going to have any revenue to get investors excited to continue investing. So again, that's a trap I see a lot of early stage companies fall into, and it ends up kind of being the chain that drags them to the bottom of the lake.
If you could take all of that and put it into one sentence, a nice tight quote, what would it be?
I want one sentence, or one piece of advice very crisply is, for founders, be laser focused and pick your investors wisely.
Brian, thank you so much for sharing your valuable insights. I guarantee that the audience has learned so many things that they hadn't even thought about, especially in the fintech investing side and what that means for them and really where the market is headed. It's been a fantastic time chatting with you, and I really appreciate it. So thanks very much for joining.
Yeah, Ted, I really enjoyed the conversation. This has been a lot of fun for me.
Support provided by the Vital Credit Card. Make a statement in your wallet with a sleek metal credit card that pays you cash back when you share and spend responsibly while helping you improve your credit health. Request your invite at vital.fintechconfidential.com.
This has been a production of Diamond D3 Media with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial decisions.